Good morning, everyone. I'm Vince Lancy. Today's morning rundown, market rundown. We will be discussing, well, there's the homepage there, right? We're going to discuss on the top left-hand side, Beijing strikes back, banning critical metal exports to the U.S. We'll report that news and give you a cursory explanation of what it would imply. Let's start with the markets first, however. You can read that while I'm reading these. 10-year yields are 426 up 4. The dollar is 106.58 up 24. S&P 500 is 6067 up 14. The VIX is 1317 down small. Gold is 2637 down 5.5, hovering near the lows of the session. Silver is 30.60 down 42 cents, starting to bleed, but still in a range. Nothing crazy here. Copper 413 down a penny. WTI 70.21 up 10 cents. Natural gas 280, well, down 5 cents. Bitcoin 96,000 up 91. Ethereum 3,700 up 97. Ethereum is definitely playing catch up now. Palladium down 10, 961. Platinum down 17, 934. UBS had a report recently that was we share with premium subscribers that was not kind to platinum. So there you have it. Gold silver ratio, choppy. Grains are all down. Soybeans 985 down 7. Corn 417 down 2. Wheat 544 down 4.8. And pistachios are unchanged. Okay. So there's the front. We're going to go through that in a little bit, but that is this story right here. And where do we want to go so we can read this? Oh, so here's the here's that story, and in that story that we just sent it out. Beijing strikes back. We're going to go through that today. The key implications of that, we'll touch on that. We're not going to give it all away. And we also have, as a bonus, BOA's commodity analysis, which discusses silver's outperformance, gold's outperformance, and the commodities that are behind the mean as well. Okay, so discussion. Beijing strikes back, banning critical metal exports to the U.S., right? This is something that we wrote based on what we read. In a sharp response to new export restrictions imposed by Washington, China has banned shipments of several critical minerals and metals to the U.S. These materials, essential for semiconductor manufacturing and military applications, include gallium, germanium, antimony, not sure how to say it, and super hard materials. Beijing also announced tighter export controls on graphite, further escalating the ongoing trade and technology conflicts. Moving to the takeaways. Well, the first takeaway is there are the three metals, gallium, germanium, and antimony. Gallium has a very low boiling point, or melting point, I should say. What do they all have in common? Well, they all have differing properties, and they're important for manufacturing and hardening of metals and coating of metals, and but they're all silver, right? So it's pretty obvious. You may say, well, why isn't silver involved? Well, we're going to touch on that in a little bit. But the key takeaways, first of all, China's leverage. Well, it's China's leveraging what they can, right? Second, U.S. diversification. We need to diversify our own supply chains, onshore, reshore, friendshore. Problem is, China is leveraging things that we really can't get in too many other places, like those three metals and other things. But those three metals, those are warning shots. That's not a big deal. I mean, it's a big deal, but those are warning shots. The big guns are gold and silver, and that won't happen for a while. Escalation risk. Well, I just touched on that. What about gold and silver? Well, you have to ask yourself some questions. Why aren't gold and silver? Now, I'm going to say silver. I also mean gold. Okay, but this is, it's easier to see because silver has important industrial applications, military and what have you, and electrical. The first question is why? What is the U.S. banning versus what is China banning? If you're trying to ask yourself, well, why not silver yet? Why not silver at all? Why never silver? Yeah. Um, what is the U.S. banning versus what is China banning? Well, the U.S. is banning export to China of what it has dominance over. So we'll say that's advanced chips and other things that I'm not privy to. Call it technology. What is China banning? Well, China currently is banning natural resources that are in tight supply that we depend on. This is the supply chain, okay? The supply chain that broke after COVID was we used their labor and their ships and their raw materials to make stuff. Now, I know we weren't making the stuff, other people were, but we were importing it, we were selling licenses, and other people were making it. So China is making advanced technological stuff too, but the core, you could arguably say, is Western, technologically speaking. So we're banning what we have a stronghold over, and they're banning what they have a stronghold over. And those are two ends of the supply chain. They have the materials we need to make the cool stuff, right? And we have the technology. We have the cool stuff, let's just say, right? I'm simplifying it, right? And so we're just not, these are ends of the supply chain. Okay. These never work, these restrictions and bans. And I'll tell you what I mean. The supply chains breaking down have to be rebuilt. So right now we're digging for gallium, germanium, or antimony, wherever it is. We're looking for altering resources. That's why U.S. diversification. Well, China's diversification also plays into it. China is looking for alternative sources to computer chips, and that would so their version that will be home shoring it, right? There's no one else who has the technology that we have in these areas, right? But that used to be a much bigger area, swath of technology that no one else had. Now, right after a while, it becomes more common, and China can pretty much duplicate what we have. It may take a little longer. You only need one of those machines that ASML makes, and then you can reverse engineer it. I mean, that's what China does, right? They're good at reverse engineering and making more efficient and then duplicating. That's important. Okay, so why is what we're banning versus what they're banning important? Well, whoever wins in this banning race is the one that can replicate what the other side is restricting faster, right? So if you want to look at it in a very simple economics way, is China going to come up with a super chip before we find gallium? I don't know, but that's the idea, right? Okay. Which brings you to the second thing. When you're trying to slow down your competitor, you ban what you have and what they need. You don't ban what you need. No one's banning silver. Okay? Both sides are scrambling to onshore and reshore those areas that neither one dominates in. You dominate in this, I dominate in that. I'm going to restrict you from having those things, so you have to pay higher prices. But I don't want them globally higher if I don't own them yet, right? So what's China doing to diversify its supply chain in metals and minerals that it doesn't have in chips? Well, it's doing what they're doing in chips. It's like, okay, I'm going to buy concentrate from Latin American countries. I'm going to build a port in Latin American countries for trade. I'm going to cut financial deals. I'm going to build factories there. I'm going to build airports there. I'm going to buy silver before it becomes silver because I already have the factory to refine it, because I don't want it hitting the marketplace and disrupting prices as being bought in the open market. I want to buy it in its rawest form. What's the U.S. doing? Well, we don't know what the U.S. is doing, but I have an idea what they're doing. J.P. Morgan and other banks, other billion banks, have China as a client. And China's going, we need to buy silver. Can you find some for us? And they're looking at, well, they're China, Bank of America and JP Morgan. And I picked them because JP Morgan's the biggest in silver, and Bank of America writes about silver enough for me to say, China's their client. So when you see the first or second biggest buyer of silver in the world constantly buying from you, what do you do as a bank? You buy more, right? And you go to your other client, the US, and you say, China's buying a lot of silver. You guys want to buy some? Because you are American. And I'm sure America is buying these things, but we're not buying it on the open exchange. We don't want transparency. We're not about transparency. So ban what you have, not what you need. So why is no one banning silver or gold? Well, that's where this picture comes into play. I'm not going to spell it out for you except to say what's in red is what China is doing. What's in dark blue is what the US is doing, and what's in light blue is what will be done or will be exacerbated or increased under Donald Trump. And the key is looking at this picture and saying, what is not circled? And that's colonies banned from trading with other nations on either side, right? And that would really, colonies really is trade partners. And that's because everyone's negotiating with trade partners. And then ask yourself, what is circled on one side, but not the other? And that's where the asymmetry is. China does not export precious metals. The US does. Well, why does the US export precious metals? Well, that's what happens when you're a free market. You can't do that because you will telegraph that the price is higher. So long story short, that's why they're continuing to deplete our precious metals, because we can't say no. Imagine what would happen if we said you can't have our metal. What happened to the price of gallium? It doubled when they restricted us from buying it because everyone else raised their prices. And that's how the game works. So right now, everyone is scrambling for silver. There's other analogies that I've used, and I think Chris Marcus has one as well. Uh, the balls that you have in school at recess, everyone brings their balls into school and they throw them in the community basket. Well, everyone's taking their balls and going home, and it's like, okay, well, and you want to make sure that you get yours back. So literally and metaphorically. Anyway, we have a lot more on that and the full story and under the complete analysis under Beijing Strikes Back, banning critical exports to the US. So if you're like, oh, they're not banned, they're never going to ban silver or gold. We're never going to do that because when we do it, it's over. It's over. Anyone in the world who has silver, when they hear that it's being banned by us from being exported, you'll never be able to buy another ounce as long as you live. Okay. All right. News and analysis. Beijing Strikes Back. We just went through that. Gold's monetary past, present, future. This is a really good piece. And we didn't write this one. It's a transcript from a speech by a very famous metals advocate. And well, we suggest to read that. It's really good. It's a nice history piece. It's a nice forward-looking piece, and it's well written. Outrageous predictions or not for 2025. This is circulating around there. Saxo Bank puts them out every year, and some of them just sound ridiculous. Some of them sound like, they could happen, and a couple of these could happen. Great read from one of the best. That's a newsletter that we subscribe to that we shared excerpts from, and Tuesday PM Post. Politics, geopolitics. South Korea is in the news, right? So South Korea had a coup. I don't know what it was. I don't know what they had, but they had the President Yoon declared martial law, and then he lifted it soon thereafter. South Korea's main labor union group called for a general strike, and in South Korea, it's probably a political mess. These things they don't really have normal takeovers for a democracy. Anyway, not to minimize it, it almost feels like a color war instigated by China to us. It ended so quickly that you have to wonder what the heck is going on there. And then there's other stories in there as well. The Middle East is bad, right? We're working on a ceasefire, but now Syria is flaring up, so that's a problem. Data on deck, ADP employment. Jobless numbers came out yesterday. I'm sorry, payrolls. It's another data point. But U.S. employment report is on Friday, and that's what we care about the most. And we also reattached the BOA commodity analysis at the bottom. Did I mention what they said up top? Where is that? We'll go back to that. No, that's not it. There it is. BOA's commodity analysis. Over 6 months, our model is bullish aluminum, copper, nickel. The BCOM TR index as posted, BCOM TR index has posted 4.03% returns year to date, with coffee, silver, and copper outperforming, and natural gas, corn, soybeans, and wheat lagging. In relative terms, over a 1 month holding horizon, we have an overweight stance on soybean, meal, gas oil, gold, and silver. All right, charts. What does this chart mean to me? It means sideways, range bound. It means we're beginning to work off a hangover of being overbought in terms of volatility, over volatile, right? So I'll give you an idea. See this line here, this red line? The red line needs to come down closer to the blue line. That's on a weekly chart. On a daily chart, the red line is now under the blue line. That means it's slowing down. So I'm betting position-wise on sideways for a month or so. And even if the market does move, it'll remain in that range, the moving averages that we've discussed here before. Silver, kind of a bummer, right? But we'll survive. Bummer because the 100-day moving average is down here, right? And, we rejected it soundly and came back. So we're in between the 50 and 100-day still, and everything's not always going to go to the moon or go to zero. So we're in a volatile range, and I think the volatility is working off. And do you remember in here? I'm hoping for this. Here's a gold weekly. There was a period in January through March, right? So there's December of last year, right? And then there's this, and I was watching it very closely during this time. I was just really, there's nothing else to look at, so I was looking at this very closely. And this volatility went all the way down here, so that's very, flat volatility. And then in March we took off. Well, this area here, although it was really nice to trade, was non-committal in any direction ultimately. And if we have another one of those, let's say that lasts for a month or 2 months, you'll start to see more metal disappear. And I'm thinking that could be the beginning of what we're starting, although I'm not betting it. I wouldn't start to think it until this red line up top here that I have gets all the way down here, which means we've got to sit sideways for another 2-3 weeks for that to happen. Anyway, in the meantime, that's it. Okay, everything's weakening. Data's coming out today. Have a great day.